You know, that's arguably what started the ball rolling, is Powell's admission not only of not raising rates, or lowering rates rather, but maybe even acknowledging having to raise rates, which seems kind of tough. I mean, look, the bond market is already kind of having gyrations, with the 10-year Treasury up to 4.4% from 4%, 40 basis points in less than a month. Bonds are being sold, and that is the Fed's nightmare. They cannot cut without reigniting inflation, which seems to be really gathering steam as we see oil prices already up to Biden-era gas prices here in the States. You know, higher inflation leads to higher interest rates. But they can't do that without smashing into the $10 trillion in bonds that need to be refinanced this year. And I think this is a problem. That the Fed is certainly trapped, as far as I'm concerned. You saw what happened when rates got anywhere near 5% with Silicon Valley Bank and Signature Bank, and the Fed pivoted away from it the minute we got there. So can they do it? I think they would have a very hard time doing it. But the funny thing is, Paul, that's really what needs to be done. It needs to be done because prices and asset prices are distorted through years of suppressed interest rates. And, you know, lowering interest rates to get new home buyers into buying homes by being able to borrow more at inflated prices is not the answer. No. The answer is to have real interest rates at a level that finds real price discovery with asset prices that have been, I don't know, disjointed and screwed up for a very long time. So if it happens, you know, you're looking at massive stagflation. You're looking at, you know, massive inflation meets the Great Depression if they were to let rates run where they actually should be.
Iran's potential return to global markets could create significant ripple effects across the financial system. During years of heavy sanctions, the country adapted by turning to alternative financial networks. One of the most notable shifts was the increased use of cryptocurrencies like Bitcoin to facilitate trade and store value outside traditional systems. If these restrictions are lifted, we could see a rapid shift of capital back into conventional financial channels. This transition would likely influence demand across both digital assets and physical markets. The impact wouldn't be limited to finance alone. Energy markets, international trade, and cross-border payment systems could all experience noticeable changes as Iran reintegrates into the global economy. More importantly, this situation highlights a larger trend. Geopolitical pressure has driven financial innovation. Even if the original restrictions are removed, the parallel systems that emerged during that period may continue to exist, shaping the future of global finance. Are you curious about investing in gold and silver but feel held back by fear or confusion? This ebook is designed especially for new investors who want clarity, not complexity. It breaks down gold and silver trading strategies in a simple, practical way. No jargon, no hype. Why wait? Hurry up. Please visit this link to get your copy today and use code DUNDEEPLE for a huge discount. More than 1,000 people took the first step with this ebook, and today they're living proof that smart investing changes lives. Start investing fearlessly, wisely, and with a clear strategy.
Well, I mean, look, it's interesting. The timing is interesting. We're still a little bit early, but you look at the Genius Act, which goes into effect next January, which the movement of dollars anywhere in the globe will be blockchain-based and backed by stablecoins, backed by 90-day or less short-term treasuries. That's synthetic demand for the front end of the curve. That sounds like neutering the Fed to me. Everyone says he's so hawkish. You know, they can only play with the front end of the curve, the overnight lending rate. Well, if money is moving and backed by short-term treasuries, 90 days or less, synthetically pushing rates down, what power does he have to do anything about that, really? You know, I just can't see an environment where Trump would have selected this guy with intentions of raising rates. You've seen how steadfast and adamant he is about rates being lowered. But that is what got us in this problem to begin with, the suppression of interest rates, where it distorted everything, created all of these imbalances, misallocations of resource and capital, and distortions in asset prices. It is the root of all the problems. The future of the gold market, ultimately, it's a way to bridge, you know, old school with new technology. And when you look at those that are out there, the digital gold system that is out there already, and there are some big players, but they're too fragmented with, each user is I don't know, they all have different systems, complex different systems. And I think what the World Gold Council is trying to do here is have shared infrastructure that handles the back end of things, where the issuer keeps the brand, the customer relationship, the pricing, the product, and even the technology. The interoperability is what they talk about quite a bit in that paper, where as long as partners are working under common standards, the goal is to make gold more redeemable, as I mentioned, interoperable, portable, to use it in terms of collateral. It's very difficult to collateralize your gold that's held in your basement safe. This is a way to do it. And I guess it's really about, kind of look at it this way. As it is right now, each one of these entities, whether it be Tether or Pax or any of the other, it's like having different gift cards to different malls or different stores. They kind of want to make it a Visa card where it can be used everywhere. And they don't have to have the same technology, but they have to have at least the same shared standards. So it allows the ability, fungibility, it allows collateralization, it allows the ability to stand for delivery. It's an interesting thought where the World Gold Council basically says you don't need to do everything. We'll help you with the back end. You just need to be able to meet the set of criteria, plug into it. And it really does, if you are able to accomplish that with, credibility. Where is it held? Who's auditing it? How can I take possession of it? Can I use it for collateral? Is it fungible? Can I redeem it? All of these things I think they're trying to do to make gold more relevant instead of watching it fade away because it is in essence bulky and clunky as it pertains to modern financial world events.
Do like, share, comment, and subscribe to this channel. Also, don't forget to hit the bell icon for more updates.